Good afternoon, everybody. Welcome to the market close for Friday, September 20th, 2024. Some people call it the first day of autumn, but I think if you actually go with the science, and when we exactly hit that midpoint this year, it's actually on the 22nd. So technically, we still have 2 more days of summer left, but nonetheless, we're here. We're gonna have a good show. We're gonna look at the market. Was not sure if I was gonna have a red sign or a green sign today. We're that close. We are that close for sure. All right, let's start right away. We'll just jump right on into the market. Let me pull that up here for you. All right, so the TSX. Holy banana bread. What have I done? All right, let's pull this down here a little bit. Eek. All right. There we go. All right, making it look a little bit better here. TSX in the red by not much, 0.02%. So kind of an interesting thing. One thing I kind of want to take a look at this. Let's take a look at this right now. I'm going to go to the, no, I'm not going to do that. I want to go to the 1 month. All right, we're going to go to that 1 month chart. All right, let's take a look here. So for those of you who have been very naysayers about September, so far, September's winning. So far, September is in the green. So that's not too shabby. What are all these letters doing here? Can I get rid of these? Yeah, let's get rid of these once and for all. But yeah, so far the TSX, we are in the green for September. So it hasn't been that bad of a month. So for those of you who like your portfolio growing, but love getting them by the dip opportunities, this has been a good month for that for sure. Now, mind you, we still have another 10 days left to see what's going to happen. But so far, it's looking good. It's looking good. With the S&P 500, same idea. They're also in the red. Sorry, in the green for the month, in the red for the day. So they're down 0.11%. NASDAQ is down 0.19. When we go into the NASDAQ is also in the green as well. So it's not that bad when we look at it on a monthly scale. Now, I did say coming into September that we were going to get a lot of volatility, but I did expect us to finish in the green, and I think this is going to happen. I think it's looking good. I think most of the volatility might be behind us. So let's see. Well, not the volatility, but most of the red, most of the really, really bad stuff, I think is behind us at this point. So anyway, we're going to talk more about that as we move along. The Dow Jones is in the green today, up 0.17%. Gold is up 1.39%. Silver's up 1.36%. WTI up a tiny, tiny bit. Bitcoin down a tiny, tiny bit, 0.14%. Ethereum, no, looking pretty good, up 3.14%. Heading on over to our heat map. Holy banana bread, look at this. Whoops. There we go. I was missing something. So, yeah. So we got mostly a little bit of green, a little bit of red in here. Yeah, I can see AXP. What is AXP? American Express Canadian Hedged on the NEO. Okay. I've never actually seen that one popping up in there before. So the bank's not too bad. Look at this. Scotiabank's up 1.68%. TD is up. National Bank's down, though. Over here, both railroads are down. CNR are down 2.44%. So there might be some dip opportunity in there. Alimentation Couche-Tard down, but Loblaw is doing pretty good, up 1.44%. Heading on over to the ETFs, most of them are just down a little bit. Some of the main ones like VFV is down 0.05%. VEQT down 0.21%. XEQT down 0.25%. So yeah, a little bit of that. There are some nice things. I guess like ZAG here is up 0.14%. But those are the ETFs. Let's head over to the United States and see what's going on there. Well, we got Apple up 1.6. Apple's had a good week. Let's just pull Apple up here for a second. Yeah, so their week hasn't been that bad. They've actually a good amount of rebounding on Apple. So I do like what I'm seeing there this week with Apple. Google's up a little bit. Microsoft's down a little bit. Meta's up a little bit. NVIDIA, they're back to their old games. They're down a little bit this week. So Nike, though, I know we've been looking at Nike after this big drop, but they do seem to be slowly making their way back up. I'm still bullish on Nike. I am still bullish on Nike. I don't think we have to worry too much about them. Let's see if there's anything else that's really standing out here. Well, Walmart's up 1.56%. Tesla's down, though. Tesla. What can we say? Yeah, it's Broadcom. Broadcom's up 2.42%. So not too shabby. Going over to that crypto map. Bitcoin, as we can see, still down 0.12%. But at the same time, they've had a pretty good week. They have had some good movement this week. So you can't fault them on today. Ethereum is, of course, up 3.20%. Solana is up 2.82%. It looks like the altcoins are doing a little bit better than Ethereum. Now, speaking of altcoins, there's like 14,000 of them. So let's just we're going to go deep. Let's go deep here. Really, really deep. We're going to find an altcoin that I've never heard of. We will grab a green coin today because Bitcoin is in the red. Let's grab this coin. Wow. How did this happen? All right, we did this one last time. Like, what the heck? All right, we'll just grab one a little higher up this time. I can't believe that we grabbed the same one 2 days in a row. That's like, I should be playing dice games or something. All right, LCX. Once again, this is a coin I've never heard of. I do not know what they do. But they are sitting at 13 cents. So that's there's a little something there. But I mean, if you look at it though, they haven't done well since pretty much April. So from April, they've been on a pretty downward movement. Now this is a coin I'm never going to invest in. It'll never be in my portfolio. It's just one of 14,000 crap coins that exist out there. Hopefully you guys don't invest in this one either. I'm really, really hoping that. If anybody does, by whatever chance, know what this one does, feel free to drop it in the comments. But there's 14,000 plus of these. I'm okay with all of the top dogs, but yeah, these ones, once again, never. All right, let's get back to you guys. Let's get back to you guys here. We'll make me big, and we'll hit the comments. We're starting off with Jonathan with a happy Friday. Let's go. Absolutely. Missy wants to know what's up, homies. So homies, I don't know what's up. I mean, we're like finance homies, right? Missy says, what a roller coaster ride this week. Yeah, a little bit. I mean, September is going to be that way, I think, no matter what. I think the problem is with September is so many people have this very negative connotation on what's going to happen in September. And there are, real life things that sort of back it up. One is that it is that second time where people are paying taxes. So a lot of people do liquidate stuff in September for tax bills. Okay, that's fine. So that is one reason that September might have sort of a negative impression right there. Also, and this is the more coincidental, a lot of the big events in the past have happened in September. Things like 9/11, the housing market collapse of 2008. So there's some really big data sets in the wrong direction that are in that September column. So they don't help. They don't help at all. But for the most part, I think September can be a good month. And right now we have seen, just going back here once again, right here, TSX. Oh, look at this. We're in the green. We're in the green. Uh-oh. Does that mean I have to change the sign? Uh-oh. All right, let's try to get out of the flashy ones. All right, where is my green? I really should not be allowed to touch this. All right, there's white, blue. Come on. Leather blue, purple. I don't know what that is. Oh, here's green. I'll just turn it down a little bit. All right. Oh my God. Seriously, I just did that and we went into the red. I really should not be allowed to touch things. It's a new rule. Don't let me touch anything. Oh boy. Anyway, what we were talking about, the reason we came over there is just to show we are this month here, we are in the green. So that's not too shabby at all. There's August. Let's go to last September. Let's see, May, June, July, August, September. So last September, yeah, we had that red candle there, right there. That was last September of 2023. So, this time around, we're bucking that trend. We are bucking that trend. What about the September before that? Let's go back. That one was red too. So we've had 2 red Septembers, and it looks like we may be getting this one as a green. So that's not too shabby at all. I'm liking that. I'm liking that. All right. Got to pay attention here because I get off on one of these tangents, and next thing you know, the bell time comes and I miss it. All right. Mary's in the house with a hello, everyone. That means, guys, hit the like button while I have a sip of coffee here. Very good. Let's see. Missy says we need to get you some red glasses. Yeah, we'll start a GoFundMe to get me red glasses. No, it's actually funny. It's actually funny. So these ones are actually kind of turquoise, but I do like that idea. It's corny. It's corny as all heck, but I like it. I do like it. All right. Mario is in the house with a good afternoon. Jonathan saying, CRWD bouncing back up. Nice. Who's buying into World Liberty Financial? I do not know. I don't think I hold any. I'm pretty sure I don't hold any World Liberty Financial. JJ is in the house with a howdy. I heard a rumor that JJ may join us after the bell. So there's that to look forward to. All right. Larry says, picked up some COLZF Coca-Cola fruit juice bottler for Mideast and STAN countries. Dropped 40% because of an Arab boycott of American products for Israel support. Coal-off sales, I guess that's Coalzif sales were expected neutral now, minus 10%. Nice. Now, this is one of the things I do like about Larry. Larry gets his, with it, because he does a lot of investing. He has a group that he's investing for. And, they do a lot of international investing. It's fantastic. It really is. Missy says, when do we get to vote for a deep dive? I'd like to do one. You know what? I don't know. Let's find out. We'll bring up, wait a minute. I was about to go off on a tangent and I got 3 seconds to the bell. Second the bell's over. All right, we are close. Woo. All right, nice. Whew. All right, weekend is here. It's official. When do we get to vote for a deep dive? That was Missy's question here. let's head on over to Discord. And I'm going to bring up the good old schedule. So, might as well edit it while we're here. Why not? I'll make you guys watch me work. This came out already, that deep dive on QQQY that I owed you guys. And we're currently doing this, the bonus market close, gone. There we go. So we got that coming up here. All right. So it's going to be a bit messy because this week coming up, actually somebody asked me to do high dividend long-term stocks. So that's going to be the list video for Monday. Then we got the channel members choice video coming up on Thursday, because the last video of every month, the channel members get to decide what it is. So that's coming up. Then after that, we have the 0 to 100K challenge. But the next deep dive that you guys get to vote on is for October 4th. So that will be that deep dive. And then you get to do another one a week later. So you get 2 in a row at least. Actually, you get 3 in a row. So that's not too shabby. And I think on the 18th, pretty sure, and I'm going to put this in here, I believe it's an ETF one. So that's going to be an ETF deep dive on October 18th. So yeah, we have all of that coming up. Now, mind you, with this channel members choice video, they might make me do a deep dive. I don't know what they're going to do yet. So, okay. I see Missy put something in. I thought we can sponsor a deep dive. Sorry, I can't remember. Yes. So that, let me take a look here. That's going to be right here, October 15th. So I will, let's see here. So right here on October 6th, that's when we'll open that up. So we'll open it up in this week. And basically that will give you guys an opportunity if somebody wants to sponsor a deep dive. It doesn't have to be a deep dive. I mean, you could technically grab it and say, I want a list video on this. Or you could say, I want you to do a tutorial on this. So you could do anything, honestly. I honestly don't care, but it's basically, my tongue's not working today. It is our subscriber sponsored video. It's going to be fun. It's going to be a lot of fun. Now, the way we're going to do it this time around, because last time I basically said, okay, we'll do it during this week. And we got, Funny Books came in and said, yeah, I'll do that. That's fantastic. So we'll put the offer out for that on the 6th, and we'll let that offer run until the next live stream. And we're going to actually we'll let it run all the way to the market close on the 9th. So we do have another video in here as well. This is a bonus on October 7th. October 7th, we're doing our 3-year celebration live stream. And I will be eating something with the bomb on it. So there's going to be pain in that one for me. You'll probably get to see me hiccup, maybe sweat, probably laugh, probably make all kinds of funny sounds. So that is coming up pretty darn fast. All right. Oh, and I see JJ in the waiting room here. Should we bring him in or should we make him wait? Should we make him wait? He does like to torture Vineet. I could make him wait for Vineet. But we'll bring him in here in just 1 second. I just want to get caught up here just where we were at. All right. So market cap 5.5 billion. USA makes 28 billion with 1.4 billion in debt. All right. That's not too shabby. Jersky is in the house with a hello, everyone. Tom Smith. Wow. Air Canada hit some heavy turbulence today. Started up 4,600, ended at only 1,400 up. Spilled my drink. I haven't looked at Air Canada today. So let me pull up Air Canada. As I do, I will add JJ to the chat. Hi, JJ. How are you doing?
Can you hear me? Or is there technical issues again?
Okay, go ahead.
Testing. I
have it. You're good. I can hear you.
All right.
Air Canada. What happened today at Air Canada? Let's take a look. Oh, they did come back down below 16. Look at that. So they had let's just go to the one day. Yeah, they started the day up at 1634 and they come all the way back down to 1595. And I kind of said this the other day when I was mentioning what was going on with Air Canada, that don't worry, I would get more opportunities under 16 to get some more shares. Now, I already bought them for this month, but I'm sure next month I'll hopefully get some more as well. So it is coming up. So how are you doing today, JJ?
Doing pretty good. I actually was able to set up my new mic this time, so I'm assuming the sound is okay. Like, just let me know how it sounds on your
Sounds
end as
fine.
well.
Sounds fine. I
All right,
mean, at first
awesome.
I couldn't hear you, but that was me.
Now it's like standard practice to basically do the technical test now every time someone comes in at the beginning. So we all know now, like there's always technical issues at the very beginning.
There's always going to be, yeah, yeah. Well, it's just because normally when I'm doing day-to-day stuff in here, I've got it muted, and then
Hmm.
I'm using it, everything's going through the headphones. So where I don't use headphones when I'm streaming, I'm probably the only streamer that doesn't, but I just always keep forgetting to turn the sound back up for people, especially when I have guests. Now, back in the old day, when I say the old day, we're talking just a couple of years ago when I used to have a regular guest on the Saturday night live stream.
Hmm.
Then I had that down to a science, but now I'm getting used to having more folks on, more folks on.
Yes, for sure. We should definitely do this more often. So it basically, on taking on your words, doing guests pretty much unlocks the capped potential of the subscriber count.
There we go. There we go.
Taking it
Using
from
my
your words from the QQY video.
Yeah. And speaking of that, poor Nine got an ad for Moo Moo. So Moo Moo is making money off of me still, even though I don't want anything to do with them. That's funny. It's kind of interesting with YouTube. You do not get to, you really don't have a lot of control over who who gets put in front of your video. I know in the past you used to
Hmm.
be able to say that I don't want this, have a small list of people that you didn't want, uh, you know, putting ads in front of your video, but I think they removed that. So that used to be fun. That used to be fun.
Pro tip, when I actually watch YouTube on the browser, on the computer, I usually have like ad blocker and sponsor block. So I'll basically almost never see ads. So that's a pro tip for everybody else. And if you're using Android devices, there is an application called YouTube. Actually, I probably should not say it because it's
Yeah,
on YouTube live
you're
stream.
basically telling
Just
people don't watch the ads. Don't let Candace get paid.
well, actually, no. It allows the ads to play, but like on the back end, you're basically like skipping through it, but it's still like it still gets processed.
That's interesting. That's
Yeah.
interesting. We'll have to see how that works, I suppose. Sophie is in the house. Hello, Sophie. Good to see you. Jersky says, with everything going green, it's going to be tough to decide where to reinvest dividends. That's where you got the
First
dog.
world problem.
Yeah, I mean, it's a thing. Like, it's not like if we go into a strong bull market, you can't just sort of sit back and say, okay, I'm not going to invest
Mhm.
anything until we go into a bear market. Um, you'll get opportunities, even if everything goes green. You're still going to have days. You're going to have days where everything completely goes to crap. It will happen. It always does.
Oh
Even
yeah,
during
for
the
sure.
strongest bull market, we have some bearish trends that will pop in, throughout it. So you'll get opportunities.
I feel like there's always two sides of a spectrum in terms of having either a green or a red day. On the red day side, you have panic, or you basically are super undecided on what exactly to buy when you have like multiple stocks on
Mhm.
sale. But then here on this side, when it's green, you'll feel like everything is like overpriced. But then you're stuck between either you buy more or you decide to rebalance your portfolio. Speaking of which, I actually took profits today and sold out some and rebalanced some portfolio holdings
Nice.
because everything was like super green for the most
Now
part.
you mentioned as well that you took profits on Canoe the other day. You sold
I
all
did.
of
I
it.
I sold all of my canoe pretty much earlier Not yesterday, but I took profits earlier in the month when it was at its all-time high as well, and then I pretty much dollar cost average into some Inbridge, some Telus, and then I also bought some H yield because it was significantly down on that particular day. So pretty much, Canoe was on my side. Canoe was a pretty good holding for a very long time, so I was significantly up. So I just decided to take profits.
Yeah, nothing wrong with that. I mean, here's the thing too. I mean, things are cyclical. So with Canoe, for
Oh yeah.
example, let's just go over here for a second. EIT. All right, and we'll come back out. We're gonna just go back out to let's go out to 5 years. So this doesn't look cyclical when you look at it from a 5-year. We'll actually go to that 10-year. Normally it hangs out about here. That's where it normally hangs out. So we have gone up. Now, part of this is that there's been a lot of inflation that's been caused. So part of this might be the new norm. So it looks to me like something around, I would say around 1276, 1280 is probably going to be where we're going to correct back to on the, as we just sort of move along. We'll keep coming back down to that level. That's what I'm seeing just from this little bit. We'll see more as we get further into the future.
Mm-hmm.
But that would mean that, if you are somebody who's looking to do some trading, selling it up here at 14 and a half, it's not a bad idea. You could move that into something else. And then when, a little bit later down the road, when it is back down to, like 12 and a half or 1270, you can always get back in. There's nothing saying you can't. So, it's kind of that interesting thing. Like some of the smart money out there, they're not always sticking with the same stocks. And that's because they're playing it. They're playing the game a little bit. Like, for example, we know right now that with the interest rates going down, that's going to be big for REITs. And we've already seen that. So with REITs going up, it makes sense to actually sell some stuff and move a little bit more into the REITs. I'm not saying sell everything you have and go buy RMAX. That would be crazy. I'm going to put that out there right now. That'd be kind of crazy. However, you might get away with it though. You might actually get away with it. That's the whole funny thing. Myself, I just can't put all my eggs in one basket, because all it would take is some black swan event that nobody sees coming. That could cripple you if you don't have your good diversification. Now, chances are that's probably not going to happen, but it could. So I always look at it that way. No matter, even if it's like, like the dinosaurs, they probably weren't worried about an asteroid coming along. And the odds were that they probably weren't going to see one. But then this one day happened and they did.
Are we going to like a historical lesson now for Professor Candace? Is that how it is?
Well, it's prehistory technically.
Prehistorical lesson then.
Prehistorical. There we go. But no, I mean, I'm just saying it's kind of that same way that, I know a lot of people. Let's give another example. When NVIDIA was doing really good, I know people who are way over invested in NVIDIA, and we know what happened at that last earnings call. Even though that was a good earnings call, they still went down and they haven't gotten back yet. So they will get back. But it just shows that sometimes when you over diversify, you can get hurt. That's one of the reasons.
Oh yeah, for sure.
It's not a good idea to do it. It's always a good idea to spread your money out.
I would say sector over when you're over on one sector, that's almost the same thing as over on one stock per se, because it's like the same sector, which means the price movements are going to pretty much move in the same direction. So it's always good to have more diversification other sectors, or just have broad-based ETFs that track everything, just as a fail-safe.
Yeah, and in my case, I don't like to go. I try to minimize my sector exposure to about 20%. I know I go over that. I think right now, I think my financials is over 20 at the moment. So that's why I want to bring it down a little bit. But that to me just sounds good. I would never want to go 100% into one sector. So even with REITs, even with what I know and everything I know about what should be happening with REITs, there's just no way I could put myself 100% exposure into real estate. It's just too risky.
I would generally say the stock market would never perform exactly how you predict it. Otherwise, it would be too easy. Let's just put it that way.
Mm-hmm.
For sure.
All right. Vic says delaying the drive to jump in the live stream. Nice.
Stay safe out there, Vic.
Yeah, absolutely. I was actually impressed with Vic the other day. He actually had found a parking spot. I think it's the first time I've ever heard of him finding a parking spot. Because a lot of times it's poor Vic out there looking for a parking spot. And Missy's
I just hope he doesn't text and drive, because oh my god, to be fair, sometimes I would glance on my phone just for direction stuff, but like that kind of stuff, I don't think it's something you want to play with for sure.
Mm-hmm. Interesting. This whole Moo thing. Oh god. I don't know how many times I've said no to them. I will admit, I have not yet received anything this week from Moo. So I think this is a Moo free week. They finally just decided that they're wasting their time sending emails to me, but they're everywhere. They're definitely everywhere. They have a very aggressive, and I think one of the things that worries me about something like a Moo is that I don't see it as being a really good value, and I see a lot of people, just from the fact that they're everywhere, getting into them. I would rather, Wealthsimple. I think Wealthsimple is definitely superior right away. Now, Wealthsimple, I don't know if you heard, they've been around now for 10 years.
Yes, they had recently had their 10-year anniversary, and I believe I saw on Twitter recently that I think one of the co-owners had a letter that was posted to be like, oh my god, like we did not imagine this, like 10 years later being one of like the biggest corporate heads in basically Canada, and it's pretty much the number one recommended for most DIY and retail investors.
Yeah. One thing too, they also came out and said that they are not even willing to entertain any kind of talk of a takeover from one of the big banks. So they're like, nope, that's not going to happen. And hopefully they keep up with that, because that would be the worst thing that could happen, is a big bank come in and buy them out just to basically keep their model intact. Because I've seen that type of thing happen before. It's never good.
Do you think there would be a potential possibility of working with National Bank? Because at least their brokerage is commission free for the most part. I know they would never collaborate or get taken over by the other ones like CIBC, TD, and all of those that do have commission fees. But do you think there could be a possibility of working with National Bank to just become even bigger?
I don't think they need to. I think when you look at the growth of Wealthsimple, they have been doing phenomenal. They've got a lot of good people behind them, and Power Corporation of Canada is also their biggest investor. Also, keep in mind, imagine if Wealthsimple were to go public. I think they'd have a lot of people, a lot of interest. So I think there's a lot of potential for them to grow. I mean, they're never going to be as big as any of the big six, obviously, but I think they have a nice little niche, and I think they can keep it, and I think they can expand on it, especially as they start to move to more and more options. So, you can have a savings account. You can do mortgages now with them. I mean, there's a lot, I think, and they're not stopping. That's the thing about Wealthsimple. It's one of the things I've always loved about Wealthsimple, is that a lot of times I'll say, this is something I think they should have, and then all of a sudden they have it.
So, yeah, they're very innovative.
A lot of times with big companies, it just doesn't have it. And a part of it too is being small. You have a lot more agility. It's easier to bring out new things. But I do like that, and I hope they continue on the same vein that they're going right now. So I'm really, really, really liking Wealthsimple.
I mean, even recently they decided to open up joint cash accounts now. So that's the next best thing. And I feel like in order to even grow bigger, they would probably definitely include more potentially corporate accounts and more self-directed, RSPs, spousal RSPs. I think that's the direction they will definitely go with now that they have most innovations under their belt now, for sure.
Now, the next big thing I'd like to see is sort of a do-it-yourself RESP, also an RDSP, a whole bunch of, I like to see a little bit more of these accounts coming in, because a lot of times, like if you want an RESP, I think right now you still have to do it on the robo side. So I think that's one of the things I'd like to see pop in with them. I think that would be a fantastic move in the future. All right. Vic said, going to cash out my BMO play, over 1,000 shares, need a large position to swing a profit. So you're looking to cash out, I think, at a loss, Vic. Am I right? Am I right on that? I know you've been sort of really building up the BMO. Here's the thing, though. On the other side of the mortgage wave, they are going to recover. So this would be one I would have a hard time doing. I would have a hard time cashing out at a loss. But that's just kind of where my mindset is on that. I would have a hard time doing it. I would wait. I personally would wait. I would wait till the other side of the mortgage. And keep in mind, too, as the rate cuts keep coming down. And if you look at CIBC actually thinks the next two are rate cuts. So not the next two, but the December rate cut and the January rate cut are both going to be 50 basis points. That could be really big. That could certainly help things. Could help at least the banks deal with that mortgage wave, because most of the mortgages are coming in 2025. The wave has begun, but the biggest part, the peak or the crest, that's coming 2025. So there is time to get that out. Now, one of the other things, I just want to touch on this a little bit as well, is that there are a lot of economists right now are starting to think that the Bank of Canada needs to be more aggressive with the rate cuts, because there's a real danger of not cutting fast enough. And if that happens, there's a danger that we could completely overshoot that 2% target. And that, we don't want to go into a deflationary period at all. But that's kind of an interesting thing. What do you think about that, JJ? Do you think they're being aggressive enough? Or are you in the other camp? I know there are people in the other camp who think we should never even started the rate cutting.
That is a really good question for the most part. I feel like there's always two sides to a coin on this. I definitely agree with you on this, that they might not be aggressive enough. But then again, it's also from a personal standpoint, I just hate the fact that all the cash ETF savings, like their interest rates, are also going down at the same time. So it's like, while holding some cash, like all the interest rates that we can get right now have also gone down. So from a personal standpoint, I don't particularly enjoy these rate cuts. But from an economical standpoint, I feel like it could definitely be more aggressive, because, basically on what you brought on that point.
Right. But keep in mind, too, and this is part of what's going on with REITs. As these interest rates come down, a lot of these fixed income things, so even, for example, your cash account that you might be holding something in, as the rates start coming down in there, all of a sudden, things like REITs start to look a lot more attractive when they're providing, a lot of them have some pretty good sized dividends. So that is another part of people moving out of fixed income and moving into investments. So that tends to be good overall for the market. REITs tend to be that one area that a lot of people do sort of focus on when this happens.
Yes.
So that's, it's not a bad thing, other than, you kind of have to sort of look at, timing. And that's kind of where it all boils down to. So with REITs, and I kind of talked about this before, my goal is pretty much to simply let it ride them up. Once we get to the point that we have hit, so the rate cuts are done, not going to say I'm going to jump out of all my REITs at that point, but I will then be looking at them in a different way. definitely won't be adding to them at that point. And I will have an exit strategy in play, because obviously when we do eventually get to a point in the economy where they do start to hike interest rates again, because they will, it's part of the way it works.
Yep.
At that point, I'll definitely clean out of the REITs. I'll probably go like last time. I sold every REIT. I completely got out of REITs 100%, because I kind of saw what was coming. And I'll do it again. So it's kind of that. To me, I always find REITs as being situational. Like, I don't mind holding them. So basically, add to them when the rate cuts are going down. Hold them when rate cuts are steady. Sell as soon as those rate cuts start going up. And that, to me, that's always worked. That served me well.
What's your projected success rate of this, and how reproducible can it be from a significance point of view?
I think it can be, I would say it's pretty reproducible. I mean, you're going to, the only thing that you can run into that can cause an issue is, like a black swan event. So take, for example, the collapse of the housing crisis. That was a type of black swan event that would, that impacted REITs when it happened. So that's a type of thing that can happen. So you always have to be paying attention. And it doesn't matter how many plans you have. If the right black swan event comes along, sometimes there's no defense. But, and this is kind of that thing. A lot of times when you look at a black swan event, it's usually something that if you can wait it out, you will usually be fine on the other end. Although human nature is panic. People tend to panic. People tend to panic sell like crazy during black swan events because, they don't know what's happening. So take the pandemic. Well, we won't even go that far back. So when the pandemic started, nobody had been through a pandemic before. Well, nobody, maybe one or two people alive on the planet probably had been around during the Spanish flu one, but nobody had been through it before. So nobody had any expectations on how bad things were going to get. And when you hear about stories of the Spanish flu and you hear about how bad it was then, you have to sort of realize too that our medicine is so much better now than it is then. But, it still colors your perception. So when we went into that, everything went down big time. And people panicked. People panicked for sure. Nobody could see that here, like right here. Here is that black swan event right here. Just like, you're coming along, everything's fantastic. You're having an okay, you're sitting around 1079, and then bang. Here you are, $6.02, or sorry, $6.20, and it feels like the world is ending. And then you're at that point where, look at it from the whole perspective. All of a sudden the market's crashed. You're not allowed to leave your house. It looks like nobody in the world is working because everybody's locked up. At that point, people are like, dear God, this is going to get so much worse. And people are like, I just better sell here. And there's probably some people who made really bad moves at 620 on this one, or whichever stock, expecting it to go further down, expecting things just to keep on getting worse, expecting a lot of people to die and all of that bad stuff. But look at what happened. We bounced right back. So if you waited, you were fine. And then not only did we bounce back, we went into a bull market just because, once again, I don't think people expected the government to start handing out free money. And even then, when the government was handing out free money, my mom was like, I know this is the end. I know the government's giving free money. It's the end. It's like, no, it's not. No, it's not. And the funny thing is, when this happened, so even just back in here, I was working in a print shop, and I was watching things develop, and I was like, oh yeah, this is going to turn into a pandemic. So I was waiting for it, and I was making my plans. So I pretty much started laying the groundwork for getting laid off because I was like, yeah, because they're going to start doing what they did in the Spanish flu. Because in the Spanish flu, they did the same thing. Basically told people stay at home, don't go to work, all of that stuff. So I was prepared for it. And I just started laying the groundwork. And, I was happy as a pie to be taking some government stuff while I was doing other stuff on the side. I was like, fine, I don't mind. And it sort of gave me a chance to sort of move into YouTube. That was one of my goals. So I was like, it gave me the time to get things set up and get any of the missing pieces that I needed to put together. So it worked well for me, but the whole idea is you don't see this coming. Most people did not think we were going to get a pandemic. So most people probably thought, oh yeah, it's going to be like SARS. It's just, they're going to talk about it. It won't happen, but it did. And it will. This type of thing will happen again. It may not be a pandemic, or maybe it will be, but something will happen at one point and you'll get derailed. The big thing is, I hate to use the word diamond hands, but sometimes with a black swan event, that's the only way you're not going to lose a bunch of money when those things happen. Whew.
Oh yeah. What a tangent though, but that was a great story to tell.
Oh, I know.
Speaking of which, were you holding canoe back then before the crash, or when did you get into it?
I really wasn't. It's kind of funny. Like, I had before the crash, I had all the gist. I had the general idea of investing. I just wasn't really putting anything in. Part of it was though because back about, let's see here, that was 2022. So back in this area in here, my mother convinced me to come back to Nova Scotia. So I was like, okay, sure, I'll do that. Because she told me, oh, the economy is better now, and she gave me all of this beautiful story. I got back and it wasn't. It was like, oh my God, this was a mistake. So I had actually planned, I was planning to get out of there. I did take a job at a print shop just to have some money flowing in. Of course, then I got trapped with the pandemic. So I was trapped for a little while, but I took that time to, once I decided I wanted to do YouTube, I started following a lot of financial people on YouTube and started getting involved online. I got involved with the High Ride channel, and that was a good move. Gave me a chance to become a regular guest and sort of what you're doing right now.
Yeah.
And then I broke out on my own. And now the funny thing is all the channels that I was associated with at that point in time, they've all fallen by the wayside. I think I'm the only one left. I think I'm like the only one left in that whole area. So I'm like, okay, well, you do what you can do.
How many were there back then, if you remember?
Well, there was a few. So back then there was my channel when it came out. There was the High Ride channel. There was the Dander Bander. They did their thing. They had like a weekly crypto night in Canada. Also there was Nate Palmatier. He was in there as well. He had a nice little channel, but he kind of, fell off to the wayside. I think he had an injury and then did all this renovation and stuff. And I always have hope that Danters, they kind of went off on their own direction. High Rye went off on his direction. So yeah, it was just kind of one of those things. It's like everybody just disappeared. Oh boy. All right. Vic got some FedEx on the dip. That's not too bad. All right. Just trying to get caught up a tiny bit here in chat. So guys, anytime I am not able to zip through the chat like normal, that's when super chats come in handy, because that means you instantly get read. Also, if you're a channel member, you have your free super chat that you have every single month as well. You can use those as well. They count as well, because they will pop up on top here. And that way there I can get to you right away. But I am still trying to get to everybody. All right. Ricardo's in the house. Hello, good afternoon. I've been on a rampage ever since they cut rates. Commodities is ruling the world. There we go. So I'm heavy uranium, have good holdings in gold, some silver, and oil, of course. Yeah, absolutely. Missy says, I'm stuck. I'm still sitting with cash. I need to get it investing. But it's just crazy right now.
I
It
mean,
is.
nothing is wrong with holding cash for now, but I would say that also depends on how much cash you're holding in relation to your overall portfolio. Like maybe
Mhm.
holding like 5 to 10% is fine, but you definitely don't want to sit on the sidelines, because if you're timing the market too much, you're gonna miss out some of the big gains. Like say for
Yeah,
example, even like but for the next 2 weeks, it's another bull run. You probably just missed out on all of those gains if you're sitting on cash. However, there is also a perspective that something else happens, and there is another little minor correction, which always happens. So my only recommendation would be to do your proper research and just go, worst case scenario, just go into something broad based at the moment.
exactly. And keep in mind too, if you haven't yet diversified into real estate, you can pick almost. I went into RioCan, but you can pick pretty much
Oh my.
any REIT, and you will see they've all been reacting, going up to these changes. So this is something that you can look at. Do your due diligence, of course, but you can look at almost any, like, pick a random REIT, any REIT. That's you, JJ. Pick a REIT, any REIT.
Oh, Northwest Health.
All right, Northwest Health. Here we go. And let's take a look. We'll pull it up. We'll go to the 6 month. And you can see. So, and you can tell right here. So basically in here is June. And since then they have, now they have had a bit of a rockier ride up, but nonetheless, you can see that slope. And you can do any REIT. Let's see.
How's
Allied
Timber Creek Financial
Property.
doing?
Who?
How's Timber Creek Financial doing?
Let's go to TF. Now, Timber Creek Financial, they're not a REIT. They're actually a mortgage investment company, so an MIC, but they follow pretty much the same rule. Now, let's go to the 6 month. Here you can
Oh
go.
wow,
Here's
that's
June,
pretty good.
and bang. So, I mean, they have, like, basically in June, they were like right around $7, and they've already gone up to 8.11. So, and this is not going to stop. They have a lot of room to grow, like I think a lot of them do. Now, I will mention this here is a REIT. This here is a MIC, an MIC that normally sits around. We go to the 10-year. They normally sit up here around 9 something. So you can see there's still a lot of room to get back to where they normally are, and that will happen. So once again, this is something that you can ride. You can ride it up to about $9 and jump out if you want. But what I do like about this one as well is they've got a pretty good dividend, 8.477%. So,
How's
definitely.
their dividend history though? Are there like risks of cuts or like reductions? Because that's
Well,
what
let me
matters the
show you.
most than just the dividend amount.
Yeah, no, of course. Let me show you their dividends. All right. So you can see 0.058. Bang, straight down there. That is they do 10 on each page. So there's 10, the last 10, the last 20, the last 30, the last 40, the last 50, the last 60,
It's never
the
changed.
last 7.
Okay.
It's never changed. They have, their dividend has been as reliable as getting a hug from your grandma, once a month. It's like, it doesn't change. It just hangs at that level. So that to me is just that's one of the reasons I really have always loved Timber Creek Financial, and I come back to it. Actually, I think I'm going to request Timber Creek Financial for a deep dive. I did one a long time ago. I'll request it. I'll throw it in. You guys still have to vote it through. I don't get any special privileges just because I run the channel. So yeah, we'll put that in. So next, when we get that next deep dive, we'll have that vote in there for it, and I'll even
That's a good idea.
yeah, I'll vote for it, but it's no guaranteed. Every so often, I'll see a stock that I'm like, oh my God, I hope this one wins. And it doesn't. It fails miserably. I'm like, no. But it
Candace,
happens.
I did want to bring something up. You know how there are the secondary lenders, like some of the smaller secondary lenders that went with with homeowners that have their mortgages, like the fixed mortgage rates, are pretty much coming up for renewal next year. There were news that saying that some of the smaller secondary lenders are basically undercutting the primary lenders. Like, do MICs get affected in any way with the secondary lenders that basically undercutting?
Not really. Not really. I mean, they have a good diversification of different type of mortgages that they're holding, so they're fine. What's happening with these undercutters is, if you think about it, basically some of these smaller companies, they have that agility. So the big banks, the big six, they pretty much respond to whatever the cut is. They have their formulas for calculating what interests are going to be on their mortgages. So what these smaller people are doing is saying, okay, well, we know that there's going to be a bunch of cuts coming up ahead. Why don't we just sort of jump ahead a little bit, and we'll offer the rate after a couple more cuts have happened? Because then all of a sudden that drops them below, because normally the smaller lenders can't offer, like, if we're at the lowest rate, the big bank, the big six, will still have better rates than these smaller lenders. So by jumping a few ahead, they're actually able to then undercut them. So they're using that to get business, and that's good for them. But they can only do it for so long. They have a window. So once we are finished all of the rate cuts, then it's going to be back to, they're not even going to be a concern anymore for the big six. And even right now, the big six are kind of looking at them and saying, oh, well, because most people will usually just automatically accept the big six. Like, oh yeah, this is the big six. This is where the mortgage goes. This is where the savings goes. This is where my brokerage should be if I do some investing. So a lot of people don't look beyond that. But, they're trying. And I don't blame them at all. I mean, if I was running a company of that sort, I'd do it. It makes sense, because you're basically just taking advantage to get yourselves a larger customer base. So it makes sense. All right. Ricardo says, wouldn't actually that's REITs front end it, and now they won't have as big as they had in the past 6 weeks. So yeah, you can think, I know what you're thinking. You're sort of thinking of some of the growth front ending. Here's the thing though. Going back to, and we'll use Timber Creek Financial for now. Actually, you know what? Let's go to RioCan. Let's just go to a REIT so we can say.
Let's do Smart Centers. We haven't looked at that one yet.
All right. Is that SRU?
SRU, yeah.
Yeah, there we go. So Smart Centers. All right. We'll go to their 6 months initially, and you can see here's the June, and bang. So they've gone from 21 to 26 per share on Smart Centers. But now I want to come out to that 10-year. And you can see here, normally Smart Centers hangs out around $30. So when you say, is it front-ended? Well, going from 21 to 30, you could say that you've had a bigger amount of growth. They're going to definitely get back to 30. But here's the thing. This is where they used to be. We've had a whole banana bread load of inflation thrown into our faces as well. So even though 31 is where they hung out, when you adjust for inflation, maybe they're going to be hanging out closer to 34, 33, 34 when they do finally finish all of their recovery. So yeah, I mean, sure, you could say that a lot has happened initially. There's been a lot of excitement, but I think there's still going to be a significant amount going forward. And when you keep that in mind with the fact that these guys all pay half decent dividends, so you're adding that, in this case here, 6.837% in there with it on dividends, total return wise, I think REITs are going to be very hard to beat for the next little while. So definitely interesting. Vic is saying 10 more CDR stocks. Ooh. I
which
know
ones?
they can do it. CIBC keeps on adding more and more CDRs. I love it. I know when I actually, back in the day, like probably about a year and a half ago or so, I did a video on CDRs, and I actually revealed all 30 that they had. Now, when I did the last CDR video, I didn't, of course, reveal all of them, but they were up around 50 something. So this probably pushes them up into the 60s. So that's great. I would love to see even more CDRs, because is a great way to get that American exposure without having to worry about exchange rates and all of that fun stuff. All right, Ricardo's got something to say. Let's see. From an accounting point of view, for me, the biggest thing that will be a black swan is the consumer debt piling up on, or car loans debt. So delinquencies are on the rise, and that's true. That is true. However, the rate cuts are going to help. As it takes less money to service your debts, that will be good. But mind you, that's not going to help anybody who gets laid off. So, we kind of need unemployment to not go any higher. So those are the numbers I'm actually looking forward to seeing next, is when we get our next unemployment reports. We want to get that nipped in the butt. And that's also an argument for having some higher, more aggressive rate cuts to try to get a lot of the things that sort of will slip us into a recession out of the way. It's like, let's nip it in the butt. I think they're going to do it too.
How many more rate cuts do you think we'll experience both in the Canada and US, at least until the end of the year?
Well, okay, so the US, so they did a 50 point cut already, and they have already said they're going to do another 50 points by the end of the year. So we're talking their next two, we're looking at maybe 225s. With Canada, I definitely see us cutting at every single meeting left this year. I don't see us stopping. It's going to be a record. It'll probably be a record by the time we're done.
Oh, damn. Okay.
I see the October cut probably being 25, unless if when we get the next set of job numbers, if unemployment goes up higher, that might be enough to make them go with an aggressive cut next time. So I'm going to sort of reserve. I'm not going to say 100% 25 or 50 until I see those job numbers. And then I'll kind of decide based on that. But if the job numbers are bad, I could see them going aggressive. Because that's the last thing you want to do. Is we don't want, the whole thing is, and they've been talking about this since the beginning, is that we all want a soft landing. That's what all the governments want. That's what all the banks want. Well, if you go into a recession, that's not a soft landing. That's pretty much, I missed the pool. I landed on rocks instead. So that's what we want to avoid that. We definitely want to avoid that. And the only tool that the Bank of Canada has really is their cuts. And that's what they'll do. I think if jobs start to look really bad, the unemployment, they'll go up to a 50 basis point. No doubt about it. All right. We got that one.
In terms of,
Ryan says, what are your thoughts on corporate U.S. bonds? What is one asset class I have not got into? Oh, that is one that you've not gotten into.
I don't like bonds.
I'm not a huge fan of bonds either, to be honest.
Yeah, don't like them.
And keep in mind, in a interest rate, with interest rates going down, I don't think bonds are the best place that you could be allocating your money at all. So I would say if it's an asset class that you haven't gotten into, I don't think you're missing anything, to be honest. So I'm not a huge fan of bonds. Honestly, if I wanted a fixed income, I probably would choose a GIC over a bond any day of the week. I know, well, now obviously the US doesn't have GICs, but
CDs.
Yeah, exactly.
But even then, like if I had to pick like a bond investing vehicle, I would probably do options on it, at least to get some income while we're performing. But bonds have never performed well in like the last 5 years. Just look at their track record. Like they were supposed to be the safe haven during the crash, but it basically went down as hard, and it's never really recovered as well. So even with these rate cuts, I don't see them really like performing much better than where they currently are.
Exactly. Michael wants to know what chart this is. So this here is TMX Money. So it's money.tmx.com. This is the company that runs the Toronto Stock Exchange. So I like their chart. I do like their chart. It's one of the reasons I use it. I also like the trading view, but I find that this one's just a little bit easier to handle than the trading view, because the trading
candles.
The trading view is a much more complicated chart. So, but for basic general stuff, I love this one, and I have very quick access to everything that I want on that. Let's see. 9 says I bought BMO right at the top in 2022. I'm gonna hold until green
Ooh.
unless something crazy happens. Yeah. I mean, let's look at BMO right now.
9 might be waiting for a long while.
All right. Now, BMO, it's one of these funny ones that never comes up when I do it. I end up having to type it out. Bank of Montreal. There we go. And then I get BMO. So every so often I get something weird like that happens. All right. Let's go to, oh, I'm on the 5-day. I want to go to the 10-year. Here we go. So even now, I mean, you can see from the pandemic, I mean, we're still above where we were before the pandemic with BMO. But if you bought in 2022, you probably bought in this peak, I'm thinking. Yeah, right at the top. So yeah, 152. So yeah, it came down. Now, problem with this peak, and I will say this for everything, it's an artificial peak. And you might be thinking, well, no, it's not. It's right there. I see it. How can it be artificial? It's artificial because you got to remember, we went into a pandemic. We went into a a bull market. This bull market was powered by free money. A lot of people getting in and they're like, oh my God, the government's giving me free money. What am I going to do with it?
They'll
Let's try
spend it probably.
investing. Let's try investing. And a lot of people did. And it pulled it up. So in a way, this bull market was basically the pandemic created it. And this bear market, here's the funny thing. The bear market that followed, it may not have even been a real bear market. It's basically everybody pumped all their money in, supports ran out. They had to pull their money out to pay for stuff. And so that slid us into, basically a bear market. I mean, it's still technically a bull market and a bear market, but we kind of know what the causes of this here cycle was. So in many ways, if you look at this growth here, we were coming like that. And right now we're about where we would have been if the pandemic had not happened. When you just look at the slope, and you run that slope up, we're right now we're about roughly where we would have been if everything was smooth sailing, didn't have that pandemic. So in a sense, all of this stuff in here, you kind of almost have to take it with a grain of salt if you think about it. So it's just one way of looking at it. And you'll see this in a lot of different things. You saw the same thing happen in crypto and Bitcoin and all those big all-time highs that it had in November of 2000. I was going to say 2021. Same thing. And then
I'm still hurting because of that.
A lot of people are. A lot of people did not expect things to fall as fast as they did. But boy, did they fall. It's actually funny. I was on a live stream when the crash happened. So we were on a late night live stream. We actually streamed until about 3 a.m.
Oh wow!
And we were just watching this thing fall. It was I believe it was a Friday night, and we were just watching it plummet. There was just like, wow. I mean, the candles, they were red candles that I had never seen a red candle as big as some of these red candles. It was just one of those things that's just like, wow.
Was it just Bitcoin, Ethereum, or was it like all cryptocurrencies in general?
Pretty much everything fell. Like the everything went. So it was kind of good. Like I was getting a little bit nervous before it all happened too. So because we had already had like a double top. And I was thinking, oh boy, there's something going on here. But I wasn't smart enough to get everything out of Bitcoin right away. So I did, some of it got pushed down, but I had gotten out of a lot of altcoins before it happened. Because my thought was when things hit the fan, the altcoins are going to really suffer big time. But now everything did right across the board.
Candace and altcoins, interesting. Which ones did you have?
I was a big advocate of Polkadot.
Okay.
And now part of the reason that I loved Polkadot was that it was a coin that reminded me of TCP/IP, because it basically was like a protocol between different coins. So you could use the Polkadot network to transfer between, like any two different coins. So it was kind of like a bridge that I was thinking, this is going to be big. This makes sense. It's, I was kind of using internet logic on coins. Now, I still think it's a good coin, and I still think it's going to stick around. Like, it's not one of the ones, like, I wouldn't call it a crap coin, but at that time when I could sort of see the writing on the wall, it was like, I don't want to be, if we're moving into a crypto winter, I don't want to be in an altcoin. I didn't expect Bitcoin to go as bad as it did, but I also I did call the bottom. I said the bottom was like basically 20,000 US with it wicking down. It might wick down a little bit further, and it did. It wicked. I think it wicked all the way down to 16 on one tragic day. But
I do remember that. It was
a lot
so
of
bad.
people, I know a lot of people got shook out. A lot of people got absolutely shook out when it comes to what happened with that crypto thing. It's like,
Oof.
Missy says, I don't like bonds with interest rates coming down. Is everyone going into REITs and utilities? So yeah, I mean, I think REITs and I think utilities as well. I mean, let's take a look. We've been looking at REITs. Let's look at Fortis. I haven't looked at Fortis in a while. All right. So when we look at Fortis, like, I think REITs are probably going to do even better. All right, let's go to the 6 month here. But at the same time, look at this. Here's June. And it's Fortis has gone from 52 to 60. So they're doing well as well. So utilities are doing well. Most utilities. There is one utility, and I haven't looked at them in a long time.
Algonquin? Oh my god.
Let's just see if they somehow.
It's so crap.
Somehow
it's not
managed
going to
to
rebound.
get a little bit out of this.
Oh my god.
Nope. Oh, everybody's going up, and they're still finding ways to fall. $7.54. Let's go to the 10-year on this.
Oh my lord.
This back in the heyday, up at 18. Everybody loved Algonquin during this stretch. I'll tell you,
I bought during that hype too, back in early 2021, and then
and
I
now
finally cut the band-aid.
It's like they bought a mole machine and they've been drilling down. Very much so. So Algonquin is that one utility that is the exception to the rule, that I don't think there's anything you can do. They just are not a good buy. There's no way around it. No way around it.
What's wrong with their earnings? Are they just in so huge amounts of debt, or is
there is a lot of debt
right now?
Now they have been selling some of their assets to try to alleviate that debt. But let's take a look and see what their current debt is right now. I know it's high. It's actually not as bad as it was. They're only at 138% debt to equity ratio right now, but nonetheless, they've had that. And it looks like they cut their dividend again. It went from 0.108 to 0.065. So they cut their dividend again. And you can sort of see when you look at just the first 10 and you see 2 dividend cuts. So here and here, that speaks volumes right there. It's just a company. The last video I did on them, my thumbnail had them in a dumpster on fire. I stand by that. That.
Oh yeah. I think everybody bought it back then for like the super like double-digit yields back during the $18, and look at it now. It's probably like if your yield on cost was still like in the $18 range, like I did, like it's probably like less than 1% at this point. It's so bad.
Yeah. Let's see here. Oh, if bond note rates come down, you get a capital gain if you bought them at a higher yields. I guess I have to look at the individual bond, but a lot of times when you buy a bond, you're guaranteed a certain return on them. So that's going to be your normal standard capital gains at that point, if they're, depending on what there is. But yeah, so I wouldn't be too concerned. Normally when interest rates change and bonds start coming down, it's more or less that the thing that changes on them is that interest. So when you buy a bond, you set up, example, a schedule for how much you're going to receive. That will be lower on new bonds. Now, if you're looking at something that invests in bonds, like an ETF that handles a bunch of bonds, that could be a little bit different. But, we can always look at that more if you really want us to. All right. I'm trying to pass people, anybody who's not talking to us directly, trying to jump over them. See, commodities have been fun playing natural gas 5 to 10% every week or so. Oh, that's not too bad. Let's see. Next Thursday will be the catalyst, initial jobless claims, and GDP revision. Yes. So in the U.S., or no, is it Canada? Now I have to look. I know that there is I know on Thursday there's a G2 GDP second revision. I think it's the U.S. though. For some reason, I'm thinking it's the U.S. I actually have it here. Give me 1 second here. I'm going to pull it up. I have my notes for this week because I have it on and the stuff coming up. So yes, it's in the U.S. So September 25th, Q2 GDP second revision. So that could be a catalyst for the market for sure. If GDP were lowered, that could certainly. I hope there's I hope the revision is small, whatever it is. Because we've had enough impact on the market, and I want September to finish green. All right, happy birthday! Smash that like button, everybody. Hit the like button, or JJ will talk forever. Go start talking, JJ.
Okay. I will basically turn you all into mindless little robots that you'll all bow down to me, basically. So through your screens. Let's keep it that way. Yes.
Perfect. Missy says, okay, I don't have any REITs, so I could do 20%. There you go. I think that's a wise place to sort of look at because, or utilities other than Algonquin. So we have both of those. All right. Oh, I don't have to do JJ because JJ can talk out loud. There we go. Let's see. Rate cuts won't help if we go into a deflationary period because then money lowers its purchasing value, and then the debt is still fixed. So that's one of the things that I believe it was CIBC is really worried about the most, is that the Bank of Canada needs to get aggressive so that we don't get into a deflationary period, because that definitely wouldn't be good. And I think they will. If it looks like we're heading in that direction, they're definitely going to get aggressive. I can't see them not getting aggressive because even TIFF has come out and said that that's really important to them, is not going beyond that 2%, going under 2%. All right. Oh, boy. Let's see. Only bought 4K worth of BMO. Not a huge deal for me. Okay. Fair enough. That's still, hopefully it gets in the green, though, because, it's still money. Money is still money for sure. All right. Enid is in the house. Hello, Enid. It is good to see you in a TFSA. There we go.
Yeah, that's the worst part when it's in a TFSA. Mm-hmm. So if you sell it on a loss, you just lost all of that initial contribution room. Kind of sucks.
Yeah. 36 people watching. Well, right now I think it's 32 at this moment. But yeah, and only 19 likes. Come on, folks. Hit the like button. Smash it. It's like, if you're ever going to sprain your finger, this is the time to do it. Hitting the like button. Well, don't sprain your finger.
Kind of morbid.
Everyone hit the like button, and Mary is in charge of the like button. So Mary said to hit the like button as well. So you guys got to do it. You don't have a choice. Ina said I started a position on. We're almost caught up on XLU after the rate cuts. Let's take a look at XLU.
I'm not actually familiar with that. What is it?
XLU, Utility Select Sector SPDR Fund. Now, this is a U.S. They are a U.S., but I have a feeling. I have a feeling there might be two of them.
Technical issues.
I know. No, it's actually Candace's brain dead issues. Let's see here. XLU. All right. See where they're listed twice? Sometimes I just grab the first one It's
I think it's
almost
the ETF
always,
version.
it's
Yeah.
always the second. It's always the second. All right, now we got ourselves a game. All right, let's go to this. We'll start with the 6 month. All right, so we
Ah,
can see in
I
this
like
case
this.
where's June at? June's right in here, but they are still doing good. They are definitely still doing good, and of course, they're investing in utilities. So rate cuts are good. Now, keep in mind, folks, this is a U.S. one, so they haven't even begun. They've only just begun. They only had their first rate cut, that 50 basis points. So this slope, this is this is just them getting ready to take off. So that's not too bad. That's not too shabby. So this might be it might be a good pick. It might be a good pick, Enid. Keep us updated on this one.
Is this? It seems like this one is not following an index per se, but it's more like picking. If you
Well,
if you
let's
want to just
just
go
take
through
a look here.
the specific holdings.
No, it's pulling it from the utility select sector index.
Oh, okay.
So yeah, it is. That's who they're charting. But yeah, no, it's interesting. Now they don't have. Well, no, apparently they do. So they have a quarterly dividend of 2.811%. That's not too bad. That's not too bad. I mean, you're going to pick up most of this is going to be your growth anyway. So yeah, not a bad choice, Enid. Not a bad choice. I like it. All right. Ricardo is off. All right. Enjoy your weekend, Ricardo. Hope I see you here on Sunday. All right. Let's see. PRL, GSY, and EQB 25% dividend raise a year. Sorry, 25%. Yeah, absolutely. Some of these are some good companies. I do love EQB. I did start with the last bank breakdown. I did include at least a tiny bit on EQB, Canadian Western and Laurentian Bank. I'll probably do a little bit more in the next one because I was suffering from the flu while I was trying to get that one together. So next one, I should have more energy to get more done. All right. Nine says
Let's
I
hope
will not
so.
sell BMO at a loss unless they start to go bust. Yeah, exactly. This is kind of the position that I would take on this. I don't foresee any of our banks going bust, not the big ones. Let's see. Natural gas is down at the moment, going back up. ALV. So ALV. I think that's Alva Petro. ALV. Here we go. Alva Petro Energy. All right, let's just go to the 6 months here to see what they're doing. So this one here, once again, you can see here's your June, and you can see this is one also doing okay. So they've been moving up, even with oil not being on the best place right now. So that's not too shabby, not too shabby at all. They also have a pretty good dividend, 9.411%. So that is a quarterly dividend, though. Keep that in mind. Missy says, I have XLU on my radar. I think everyone now has XLU on the radar. Thank you. Thank you, Enid, for bringing that one forth. Let's see. Do you believe natural gas is going to get some wind? Hopefully not blowing towards me because it's stinky, right? Natural gas, yeah, absolutely. I think natural gas, I think all of our energy sector is going to do better. Right now, it's kind of in that situation where we have a little bit more surplus than normal. And unfortunately, at least in North America, and once again, I have yet to check on the long-term weather. Well, actually, let's do it right now. Let's do it right now. I keep saying this over and over again, and that's just not fair. All right. 2024 fall forecast, Europe. Let's see if this works. All right. Autumn forecast. What is it? They're talking about La Nina as well. See if I can just get a simple. I just want a simple temperature. I want a simple temperature map here. Let's see. Okay. La Nina. I can sort of see. Oh, let's pull that away. All right, I'm just showing me weather patterns. I don't want to see weather patterns. I want an actual forecast for. That's interesting. All right. One of the things that's interesting here is you'll see this green pattern in here. Now, I assume this here is warmth, right? So the green pattern means warm. So it looks like there's going to be a lot of warmth over Europe. This is kind of interesting. But now, is that, I'm just trying to see September. Now, this here is 1980 to, they're not clear, like, holy banana bread. Okay, let's see here. Long-term forecast. All right, this is good. This is what I'm looking for. So this here is kind of us. So Ontario, you can see on this side, we're going to have a hotter than normal fall. And that's, that's all coming in. So it's going to be warm on this side of the country. It's going to be closer to normal in here. And it's going to be a little bit chillier in the west. But if you look at Europe, Europe is not looking good. They're going to be warmer than normal. So looking at this, and this is the thing, this is the type of thing, when you're an investor, right? If you do something simple like take a look at forecasts and you see, okay, if it's going to be warmer than normal in Europe, that means they're going to be using less energy. So less oil for heat or natural gas for heat. And you could do the same thing with, you could look at, for example, Asia as well. I think Europe has a bigger impact overall on us, but you could look at Asia as well. And then that will give you a general idea. So just from looking at this, now I have two pieces of data. To me, that indicates that there's a chance that we're not going to see really a recovery in the energy sector until maybe, well, there's different issues that could come in. One issue, for example, is if OPEC cuts more production, that could certainly help. But if things stay the same production-wise right now, that surplus doesn't look like it's going to be gone in the fall. Perhaps the winter, things will switch around. But for now, it looks like you're going to have some time for DCAing into that energy sector. I know that 9 is doing that. So, that's the whole thing. And this is kind of that thing I was looking for. I need to find some good sites that have this for me and then bookmark them instead of having to just jump in like that. But yeah. Can anybody recommend an ETF for defense in the US, please? I don't know of any off the top.
Look at my next comment, Candace. I listed 3.
Did you? Oh, there we go. There we go. I didn't know any off the top of my head, but JJ just proved right there why he's a mod.
Yeah. And then we can actually go through each of them separately on the charts to see like if there are any good, like any of the best ones so far.
Exactly. Now, one of the things I will point out, I tend to not talk a lot about defense. And the reason I do that is for some people, there's ethical issues behind that when it comes to investing. So, and it's actually interesting when you go to a lot of ETFs, their page, you can actually go down and they'll actually show you a breakdown on how much of their portfolio, for example, is going towards military or going towards nuclear stuff or things like that. So that way there, if those are things that you don't want to be involved in, whether or not you've got an ETF that is respecting that. And I respect that because some people are like, I don't want to invest in anything that's going to be used for war. No problem. I can understand that completely. So, and that's the thing. And you can go really, really far. Like you can look for companies that have really good ESG records, and that's absolutely fine. It really boils down to there's so many good ways that you can make money today that you don't have to compromise any of your ethics or ideals. If you're a full-on green investor, there's full-on green ETFs out there for you. There's full-on green companies, and the information is out there to help you find it. So definitely something that you want to look at. All right. I'm chuckling.
Speaking of when you mentioned this, this actually brings back the little beef that we had probably last weekend, if you remember exactly what I'm talking about.
Yes. Yeah, exactly. I mean, and that happens. And that's one of the reasons that we, have that shut down. It sometimes, sometimes both sides can be right or both sides can be wrong. It doesn't matter. But yeah, I look at stuff like that. I think it was actually a weekend before last, but now I chuckled
Yes,
because
I think it was 2 Sundays ago. Yeah.
yeah, I laughed for a moment ago because of this comment. I saw this out of the corner of my eye as I was talking to JJ. I completely misread the first word. I'm like, what did she just say? But it's pansies. So yeah, that's what I found on Chat GPT. But do you have any experience with any of those? I've never really invested in military. Personally, to me, it's not even. I mean, I don't know if I call it ethical or not. It's one of these things where I don't know. My interests have always been much more on the technical side. Now, mind you, I may say I don't invest in something like these who are defense, but I'll invest in companies like Nvidia. And if you think the military is not using Nvidia, I got some swampland to sell you in Florida, the Canadian part of Florida. So there's no Canadian part of Florida, but anyway, I'm just saying you kind of have to sort of go. You have to go with your own flow in this case. So yeah, with those companies, I mean, I can look. So let's see here.
Yeah, let's do it anyways. Do it one by one because I personally don't invest in the defense sector because I mean I don't really like picking this sector specifically, but it's still good to look at as a possible option.
This one here is aerospace and defense. So let's pull that up here. So this is kind of nice. Now, what I do like about defense is, maybe it is a company that when it comes to defense, they're only looking at defense, defensive weapons. That's fine. Aerospace is kind of cool too. What the heck is all that? Now, it's not really giving me much information here. So I pulled up the only one it had for it. Let's just see here. It's like, how when they have two? There's only the one listed here, but for whatever reason, I'm getting nothing on it. So I could pull up the 6 month and it's just going to be flat. So it's not giving me any usable data on that one. Let's just take a look at that second one. Just a second here. Where the heck was it? All right, PPA. Let's go with that one then. See if we can get some information here. PPA. So Invesco. All right, here we go. Now I have the second one. I actually clicked on the second one this time. I'm impressed.
Yay, you're finally going to get it.
For the last year. So, this has been doing fantastic. Look at this. This is a lot of really good growth. They do have a dividend yield. It's very small, though. It's only 0.56, but this is going to be a growth stock, 100%. If we go in and look at their key data, all right, first thing, I got nothing here. I hate it when this happens, where I got nothing. I got nothing on their debt to equity, nothing on their return on equity, return on assets. So I don't have a lot of data here. So this is the type of company where I have to then go to another source. So this is what, PPA. So let's try. I'm going to try Simply, see what they're going to give me on this one. PPA. All right, here we go. PPA. No, I'm getting very little information here on them as well. All right, we'll actually try this here. Okay, let's take a look here. So right now I am seeing, they're saying that they're overvalued. I want to go down here to financial health. Take a look and see. All right, here we go. So they have no debt. That's kind of a good thing. This is something I wish I had known. So they have no debt. That's fantastic. So yeah, debt free. They haven't had any debt in their last 5 years. So that's not too shabby. That's not too shabby at all. Past performance here. Well, let's see. So their return on equity, they actually do have one. It's around 19.3%. So it's not bad at all. Company. It's not a bad looking company at all. If this is a company that you're interested in, once again, you're probably going to be looking at growth. Sometimes with some American companies, I find that like another place you could have went as well is Yahoo. Whoops. Yahoo Finance is also another good one. Sometimes I will just go to Yahoo Finance with a US company. PPA. Here we go. All right. Now keep in mind, this is also an ETF. So sometimes that's kind of some of that reasons here. I forgot as well that we're looking at an ETF. So that makes sense why they have no debt. That makes sense why they have no debt. But yeah,
From what I can gather, they probably do all track like a very similar index. So most of the holdings will probably be the same.
Your year to date, 23.14%. So that's not too shabby right there. Yeah, I think this, I can't see anything wrong with this this ETF at all. I would, of course, definitely, if this is something you're looking at, Enid, I would definitely go to I would go to their webpage. So for example, here, see if we can find it since we're in here. So just all you do is PPA ETF. Usually that's enough to find a page. I'm going to say don't allow because I don't want to confuse it with Canada. So here's an Invesco website. They're the company there. So Invesco Aerospace. I'm going to go with this one here and see if it takes us there. All right, PPA. So yeah, this gives us a whole bunch more information. So in here, you can see, for example, their management fee 0.50, total expense ratio. So that's basically your MER, 0.58. And
does that include trading expenses? Because sometimes that's separate, but I'm assuming in this case it's included.
Kind of like when actually with QQQY, they had a few other trading fees that were in there. So that's why I gave that full 1.30% on that one. But this one, once again, it gives you a general idea of what it has. Now, let me see here. Here are your holdings on it. So you got Boeing, Lockheed Martin, General Electric, RTX, Northrop Grumman, General Dynamics, L3 Harris, Honeywell. So obviously these are not all, like some of these companies like not General Dynamics, I was going to say General Electric. Most of that's not even going to be defense stuff. That's going to be a whole bunch of other stuff in there as well. But yeah, it's not too shabby, but that's the whole thing. You want to go through, look and see. This one here doesn't actually give you a complete percentage breakdown of sort of ESG type topics. Some ETFs, I find Canadian ETFs are more likely to do that for you. All right. All right. And Enid's saying, I think
what's your personal opinion on investing in the US defense sector? If you want to elaborate on it.
I agree with Enid that it's going to go up. But there are certain sectors that I'm probably not going to touch. Defense is one. I probably would not invest in something that if I think that if I'm investing in a company that I think is probably not the best for everybody, let's say, for example, I would never invest in a tobacco farm. You know, there's a few different ones. Like
that's Larry's next comment, actually. Something tobacco related.
There we go. There we go. Yeah. Yeah, like, you know, and it's the same thing. I mean, yeah, I mean, obviously I might invest in a company that sells things like cigarettes, but you know, I would never invest in something. Or if there was a company out there that was let's say they were just making PCBs for the hell of it, I'm not going to invest in them. So I don't want to say, I don't know if it would be moral. I would say it's more of a scientific type, moral type thing. Now, I would have no problem. Like if it was a defense and aerospace. So let's say if this one here had very little towards, you know, any kind of offensive type weaponry companies in there. But a lot of times it's hard to draw that line. So, you know, I'm not at the point where I will go into a company and I will go through all of their ESG statements to make sure that they're not making a bullet, that some company in that ETF isn't making a bullet or something. I'm not going to go through there. But if I know about it, then I might, you know, I might make a different choice. I might. It just depends. It's hard to put, sometimes it's always hard to figure out what your own personal morals are. But let me just say this. If I don't invest in a defense company because I'm thinking, maybe I don't want to put my money there. If you invest in a defense company, I'm okay with it. I think everybody has to make their own decision on what they want to invest in. It's like crypto. Some people are like, I don't like crypto. I think it's a scam. I'm not going to invest in it. And I'm okay. Like, I respect everyone's opinion. I respect people. And maybe I'm like a dinosaur when it comes to this, but I actually find people who have different opinions than me to be the most interesting people, because I have a lot more to learn from them, even if it's just learning how they think, learning how they're seeing the world through their colored goggles or whatever they're looking through. And sometimes, and this is kind of this thing, I'm that type of person. I will bring an opinion with me, but I will listen to other opinions. And many times at the end of that encounter, I'm probably leaving with my opinion a little bit different, because I like to listen to other arguments. And sometimes, and there's times I'll go, I may have an opinion. And after, sitting down and talking to some people with completely different opinions, I might actually leave that counter completely changing my mind, because that's the way I look at it. Because even if you take any two people, who have completely opposing ideas, the odds are neither of them are right, and that the truth is somewhere in that middle, which means that it makes sense to try to figure out the other person's perspective and sort of work back and forth on each other's perspective. And maybe both of you move a little bit closer towards that truth, that little truth nugget, wherever it happens to be. So yeah, I'm totally okay with that. Anyway, that was another tangent.
That's fine. There was one thing I did notice. If we're looking on the PPA fund sheet, there is a very big difference between the underlying index and the actual benchmark. I don't know if you actually noticed that, especially since for the look at just the 1 year, 3 year, 5 year, and 10 years. I wonder why that is. You notice that there's a pretty big difference.
They're exceeding it big time. Like the 1 year, 22.95 versus 14.47. So that's not a bad thing. So Enid, if you're looking at this one, there's nothing wrong to watch them actually beating the bench. Now wait a minute. Just give me a second here. Let me back up. Let me forget everything I just said. So this is
because the ETF is basically matching the index, but then what is the benchmark they're comparing against?
There we go. Well, there's a 1 there. Should there be a 1 down at the bottom of this page? Well, you would think there would be a 1 underneath here to tell us what that means, but there doesn't appear to be a 1.
It could be the S&P 500 or something.
Maybe, huh? That's weird. Normally, if you put a little annotation like that, there's always like, oh, wait, down here. Here's the 1. The S&P Composite 1500 Aerospace and Defense Index. So that's what they're using. So they're using this Composite 1500 Aerospace and Defense Index. Okay. So that consists of all aerospace and defense stocks included in the S&P Composite 1500 Index. So that's what they're using as their benchmark. Then the underlying index, I'm going to assume, is going to be the index that this one is matching. So it's obviously doing better than what they're using as the benchmark. So I personally, it really boils down to, I think they're still doing fantastic. So when you look at their year to date, that underlying index is still beating what they decided as the benchmark. So that's fine. I suppose that's fine. As long as, it might be though that benchmark they chose is a little bit too easy.
It looks too cherry picked in a sense.
And it might be. And that's kind of where I was going with that. But what isn't cherry picked is the fact that they are doing good with their return. They have been doing good year to date. And, just look at this. Look at this chart. It's not a
comparison because that's chart. Always the.
Go to the 1 year. Not a bad looking chart. And actually, even if we go further back, and this will be great here. Oh, there it is. I was looking for the that pandemic drop. I was like, I want to see something. I was worried I wouldn't see anything. So yeah, but look at this. They barely see. Here's the thing. They went to the pandemic. They had that normal recovery, but then right about here, when everybody went into a bear market, their bear market was pathetic. Then they pretty much flattened out and they've been curving back up. But once again, this is one that's not going to follow the economy. It's going to follow something else. It's going to follow the volatility of the world. So obviously, if there's a lot of friction and you got like you got the war in Ukraine, that's when defense spending does tend to go up. And keep in mind, even though this is mostly US companies, the rest of the world, a lot of the countries that are bordering Ukraine, they're spending like crazy on defense as they were worried about whether Russia would keep going. That whole concern. So that definitely. What are you doing, kitten? The kitten is here. Just
Which one is it? Winter, like
yeah,
last night?
It's winter again. Yeah, here, winter. She's looking for treats. That's what she's doing.
I think she might be very interested in the defense sector. Maybe you can buy her, I don't know, like weapon-shaped treats or something.
Yeah.
Get her to look at that.
I don't know, but weapons. She's kind of. Oh, come on, kitten. I was going to show everybody the kitten. I showed her last night on the exclusive live stream. Come here. She as soon as I go to grab her, she like leaps up and it's like, no, I just want treats. I don't want to be on the show. I don't want to be on the camera. But she's there. She's there. All right. Let's jump ahead a little bit here. Let's see. I'm interested in STRL, infrastructure for data centers, but waiting for a dip. Yeah, I think infrastructure. I think any company that is involved with infrastructure for data centers is going to be big, especially as AI continues to jump out. So let's take a look. STRL. All right.
After that, we should look at Shield because that's something I brought up.
Here we go. Sterling infrastructure. All right, and we'll go back. We'll go the full year on this one. Whoops. We'll try to go to a full year. Here we go. Yeah, I mean they're doing okay. Kitten, what are you doing? She's having some fun. All right. Yeah, I mean, I like this. I know a lot of people think the AI bubble's done. It really isn't. There's so much more to come. I still think we're at the beginning of the AI bubble. As we get more and more into that bubble, there is going to be a bigger demand for data centers. This type of infrastructure that a company like this provides, I think is going to be in high demand. So I do think this is a nice long-term play. I do like it. All right.
Can we do a comparison between SHLD and PPA and see which one's better?
All right. You want to see the SHLD?
That's actually what I personally hold. Just a little bit.
Okay. All right. Let's look at that 1 year. That's the 5-day. 1 year. They have a very similar slope for sure. Yeah, their dividends are not that far off. This one's semi-annual opposed to quarterly. Now, I don't know if I'll have much data in here if this is an ETF as well, but let's just take a look. Yeah, I don't have any real data. To me, they look, just from that initial look, they do look like they're similar. Let's see here. Let's pull it up over here. SHLD. All right. Let's pull this up. This gives us a little bit more here. Bigger total return, like this is almost double. 32.96 on their year to date. So they're definitely doing better on that total return. So I think they're both good companies, but right now this one does seem to be winning the race for now with total return. But that can change over the course of a year because it can very well be that they've just had a really good week all of a sudden.
It also is specific because these are more like technological companies, so how the tech bubble, so that actually definitely helps as well.
That would help as well, but yeah. So, you know, I like them both. I think they're both good companies from the looks of things. So not too shabby here.
Would you add to this one?
What would I do?
Would
I
you
add
add
it?
to this one? Yeah.
Um, Hard to say. Probably not. I probably wouldn't add it for myself. I respect where it's doing, and I think, you know, it's more or less. And I think part of it is too, with a lot of the transparency that I have. So if I were to add a stock like this, there are people in the community that would be upset with me for that. To be honest, they'd be like, "Oh, why would you hold a stock like that?" So I try to avoid controversial stocks. I will say that right out. You know, and I don't mind. I'm okay with that. I'm completely okay with, you know, looking, sort of staying out of the fringes. Probably the most fringiest thing I do, vesting wise, is probably Bitcoin. So, you know, I would avoid it for, you know, that reason. Now, if I wasn't doing a stream, I probably would still avoid it. It's just one of those ones
Very
that,
interesting.
yeah, it's just one of those ones. Like, I don't mind if some of my stocks do some defense type stuff,
Hmm.
but more as a side note. So that's like, you know, different technology stocks, of course. You know, there's going to be a filter over into, you know, because obviously military uses chips now, for almost everything. So if you're investing in tech, you are investing in military a little bit.
Oh yeah.
You know, there's no way around it. But I don't think I would go to a point where I would invest in a company that was their main focus, was military. So yeah, I would back away from it. All
Fair
right.
enough.
Let's see. XAD is in Canadian funds. All right. Let's see. Larry says, if I were to own a defense stock, it'd be Lockheed Martin. A few quarters ago, they announced that the US government would be doubling the amount of factories Lockheed has and paying for it. That was during their earnings call. Andrew is in once again. Andrew, you're going to take this. You're going to take this away, that title away from Mary if you keep at it. So tap the like button, unless you already did. If you have already, take a drink. All right, I'll take a drink anyway. Why not? Let's see. Candace, have you looked more into Payfair? If not, what do you think of VHI or PTRL? All right, let's look at VHI because I haven't really gone much deeper into Payfair. That's the wrong screen. Here we go. What were we looking at? VHI. All right, VHI. So Vital Hub. Then I have a funny story for you guys after we look at this one. Not a funny story, but
Ooh,
you know.
story time. Story time is always nice time.
I know. All right, just give me a second here. All right, we'll pull up that 1 year. So I like the growth that we're seeing on this. They were like a $3 stock, and they've gone up to 8. So they've almost tripled. They've almost
Dang, what a
tripled.
rocket ship
Yeah, this
from
is a
the
nice
way it
growth.
looks
Nice
like it.
growth on them. They don't have a dividend. That's fine because this looks like a growth stock right there. Let's go into that key data. All right, so key data. Return on equity. All right. So they are profitable. I like that. 4.3. This will get bigger. This will get bigger as they grow. Return on assets 2.9. That's not bad for a company at this stage. They also have very little debt. So their debt to equity is 1%, that debt to equity ratio. So I like what I see here. I do like what I see here. So definitely a good little company. I think they have a good chance. All right. Here is this
Would
funny
would this count as a small cap or like a micro cap stock, technically?
Let's take a look at, give me a second here.
Wonder what they hold or what they do.
Let's see, their market cap is 445 million. So yeah, this is like, I would say that they're, you could call them a micro cap. I mean, they're almost big enough to be a small cap. What do they do? So here, they are a technology company. So they develop technology for health and human service providers in mental health, long-term care, community health services. So basically, a lot of the sectors that they cover are sectors that
It makes
baby
money.
boomers,
Makes
baby
sense.
boomers are moving into. So that's not too shabby. All right. Um, so our funny little story. This will be our last story of the stream.
Wait, I think we're missing one because there's also PTRL that Andrew was asking for.
He's getting one this time. He's getting
Okay.
one.
Okay.
We'll
All right.
do that one on the weekend for you, Andrew. All right, QQQY. So this is the note here
Yes.
today. Now I want to point out. So here it is, the evolve, but there's a US QQQY.
The Defiance one is
100.
that one's
So
really
they're
bad.
similar. They're similar, but they're completely different. Completely
Yeah.
different companies. So I actually got a comment on this video today. Somebody was asking about a reverse split.
Not the right one.
Yeah, they were looking at they probably Googled QQQY, and the US one had a reverse split. I think it was a 4-1. So that
Yeah,
one
they did.
had a reverse
Pretty,
split, but not the one today, not the Canadian. The Evolve one has never had a reverse split. It hasn't even been around that long. But
the
this
Defiance one had a 4-1 reverse split about 2 weeks ago, just because their nav was falling too much, so they basically had to. Otherwise, they're risking like getting margin called.
Yeah, exactly. So that was, I wasn't really going to go too much into the detail on why, but it's just funny that, I had somebody questioning the stock about the margin split. And I was like, no, that's the US one, not this one. So this one is fun. All right. We've been at this for a while. I can smell
story
food.
time.
I can smell food. I can smell supper. I can smell
story time. You said story time.
Well, that was the story.
Oh, okay.
It was a little story. It was a little story.
That doesn't really count as a story. Come on.
No, well, I'll save up a story. I'll come up with a story for the weekend. For this week, we'll have a story. Okay. I don't know what yet. I'll think of something. I got tons of stories. So more or less, it's like, which ones haven't I told yet? So that'll be the big thing. So we will bring that out. So for everybody in the chat, let's get rid of this. We'll make ourselves bigger here for a bit.
Yay.
Yeah, exactly. Well, anyway, once again, this has been a long market close. I think it's been the longest one I've had in a while. So have a fantastic weekend, everybody. Hopefully, if you're on this side of the country, I know you're going to have a warm one. If not, if you're on the other side of the country, maybe it's time to pull out a sweater. I don't know. It could be. Anyway, until then, everybody.
Getting there. Pretty much now temperatures, even in Montreal, it's starting to drop a little bit. Like now at like nighttime, it's pretty much dropping to like less than 10 degrees. But like during the day, it's still like 25, 28.
Yeah. Well, that's funny. I'm not far from you. And I know last night, I think our low was about 14.
It was about 10 degrees last night. It was cold.
Oh, wow. I think, yeah, my mom on the East Coast is saying that it was getting chilly there. So, but it'll be fun. It'll be fun. The weather's coming. Anyway, everybody, we will see you guys on the weekend. We'll be here for the live stream on Sunday. Looking forward to it. Until then, everybody, take care. Enjoy your weekend. Bye, everybody.
Bye.